Hello, financial fans. A down week we've just had for sure. I think this is the biggest down week since I bought my first stock 50 years ago. This is the biggest drop that I have seen as far as percentage-wise in 1 week or percentage-wise in one day. It's been a down day. My portfolio as of today, this is what, Friday? I think it's, I'm not sure, the 6th, I believe, of May of 2022. And my portfolio from the beginning of the year to now is down 9.06%. So it's down, but it's not yet down 10%. And the S&P 500, let me take a quick look at that. The S&P 500 for the year to date is, there's the diamonds, there's the IOO, there's S&P 500. Year to date is down 9.49%. So I'm beating the S&P 500, but not by very much. And I'm going to look at some stocks today that are exchange traded funds, and these are groups of companies, lots of companies that you can buy in by buying a mutual fund that owns many different companies. And these are probably the most respected names in exchange traded funds, and I will just mention them to you and tell you that if I were planning on buying anything, this would be what I would be buying right now. And whether that turns out to be a wise idea, maybe I should wait 2 weeks, maybe I should wait 3 months, maybe I should wait 1 year. I'm not planning on buying anything right at this moment, and I'm not going to sell anything at this moment. So we shall begin by taking a look at an exchange traded fund. This is the SPDR, SPDR, Diamonds Exchange Traded Fund. And the Diamonds is symbol DIA. And the thing we're going to be looking at, middle column, near the bottom, the expense ratio, 0.16%, so it does not cost very much. The investors are not losing money to lots and lots of expenses for a fancy board of directors table or anything. This is 0.16% is the expense ratio. And the year-to-date total return minus 5.78, so it's doing a lot better than I am, and it's doing a lot better than the S&P 500. And this particular ETF trades an average volume of 6 million shares per day. That's the bottom of the first column on the left. And next, after DIA, we look at VOO. When you see a V in the mutual fund symbol, VOO, that usually means Vanguard, which is the case here. And this is the Vanguard 500 Index Fund, which is the same thing as the S&P 500, just a different company's version of it. And we can see in the column in the middle, toward the bottom, the expense ratio, 0.03. That they're almost not charging you anything there. And the year-to-date total return, minus 9.39%. And when we look later on at the S&P 500, the SPY, it'll have pretty much the same numbers, except it'll have 9.4. And you notice the beta is 1. It will always be 1. It tries to mimic the S&P 500. And they have an average volume, the first column on the left at the bottom, average volume of about 7 million shares trading every single day. And the exchange traded funds are something for you to look into if you're planning on buying anything. I'm not a financial advisor, and any money you put into the stock market you can lose. But I will tell you that over the years, when something anywhere near close to this happens where the market goes down, if you're patient and hang in there, you'll be rewarded for your patience. The next ETF, we're looking at exchange traded fund. IOO, looks like the number 100. It's IOO, the top 100 companies in the world. And we look at the bottom of the column on the left, 174,000 shares are trading each day. That's not a lot, but this has a policy of mimicking the top 100 companies in the world. Now let's look at the expense ratio near the bottom of the column in the middle, 0.40. So that's if you don't trade very often, the 0.4 won't bother you. If you buy it and then you hang on to it for a couple of years and then sell it, you won't even notice that 0.4, I don't think. The beta 0.95, which means it's almost the same as buying the S&P 500, not quite. Year-to-date total return, they're down 7.37%, which is better than what I have done, but not as good as what some people are doing. Next, we look at SPDRs, SPY, exchange traded fund. This is something that is mimicking the S&P 500, the same as VOO did. And we look down near the bottom of the column in the middle. We see the expense ratio is 0.09%, not very much. And the beta is 1, of course, it's going to always be 1. And the year-to-date total return 9.4% down. And that is almost the same as a VOO, which was 9.39% down. And we look at the bottom of the column on the left, see the average volume is 107,000 shares trading every day. And so that might be something for you to consider if you are considering investing while the market is low. If you're going to buy low and sell high, this might be a time to get in. And SPY might be a good choice. And I thank you very much for watching.